Yo, what's good everyone? This is Outer Circle Trader, OCT, aka Adnan. So this is the first video I'm doing a face cam with because I have something cooking up for you guys and shit, you know what I'm saying? My hair looks mosh up, don't look at that. I got a pimple and shit, you know what I'm saying? But yeah, someone be sucking my nose too much. Anyways, so I got something cooking up for you guys. You know, some of y'all will like it, some of y'all might not like it, but you guys will see in about a couple weeks. I've been working on it. It's a project. It's a project I've been working on, for a while. So yeah. Again, it has something to do with us. I'll give you guys like a little sneak peek. It has something to do with Discord and like having a whole community and stuff like that. But right now I want to start popping out videos for you guys to actually get in that community, or to get that community out there at least, and have you guys get into that Discord server. So moving forward, this video is going to be basically me teaching how I trade and my strategy and what I use almost every single time I trade. Okay, so this video is gonna be raw, uncut, kinda a little bit, and I want to be as authentic as possible and be as transparent with y'all as I could as possible. So yeah, anyways, my favorite pair to trade is NASDAQ, US NAS 100, and I don't trade futures. I know how to trade futures. Futures trading is so similar to like indices trading, I guess. Not really forex. It's kind of different from forex, but if you guys traded indices before, it's pretty similar. My favorite time frames to trade on is 5-minute and the 1 hour, and I'll tell you guys why in this video. So what I do is I wake up usually at 9 a.m. and I wait for the 9:30 candle market open, and that's what kind of dictates where the market's going. 99% of the time, whatever the open candle is, if it's a bullish open candle or a bearish, 9 times out of 10, it's going to be that trend, so a bullish or bearish trend. For example, I like to go on the hourly, so I can show you guys. At 9 o'clock, right, on market open, or New York market open, we got a bullish candle, and price kept going up and up and up and up, and we went from 20,000 to 20,230, around there. Okay, that almost always works. Okay, anyways, so you guys get the point. I like to be on the 1 hour to check usually my daily bias, or not daily bias, but see where the trend is at the moment. Then I would drop down to the 5-minute, and I would mark out any significant key points. There's a baby crying in the background. I'm sorry about that, but I like to mark out key points when a market structure shift happens. So for example, this market structure shift happened down here. I like to mark out this fair value gap. Okay, and this happened at around 10 a.m. in the morning. And also this fair value gap happened. So this is a market structure shift, and a fair value gap happened here at 9:25. Okay, so this 9:30 candle broke above this structure point, making it a market structure shift, and then you'd kind of wait for a relative entry, which would be this black candle right here. So my entry would optimally be here, and then I would ride it until thing is, I would kind of have my trade go until I'm comfortable with the amount of money I put. I don't really trade the same as I did before. I don't use 2% and all that risk management as much, only because it's me. I do always push risk management, and I do always push okay, you guys gotta be careful how you trade, and psychology and all that is great, but because I'm a little bit more experienced than most of you, I'm comfortable enough to put in high number of lots. So I kind of trade with 4 to 6 lots. I kind of bounce between sometimes even 5, and I get a few pips up and then I'm out, really. So like this blue candle itself would be enough for me to just pull out. I wouldn't really ride the wave unless I'm actually like using the 2% method. But I kind of got sick of that after a while, and it became too repetitive for me to where I kind of would have winning days and then I'd lose some days, and it kind of balances it out back to break even, which again happens sometimes, and that sometimes would really be annoying. So I gotta pay the bills, you know what I mean? So I started going for higher lots. I don't condone full porting. I'm not full porting, but I am putting a higher percentage. Instead of 2%, I'm putting in about 6% of my account, which is usually not okay. But I let it slide for the most part. Yeah, and again, like I've never lost a trade. I've never lost a trade for like the past month and a half, 2 months maybe, almost 2 months, because I only trade bi-weekly. So I trade once every 2 weeks, or maybe even twice every 2 weeks, and I would pay myself out through prop firm trading. Obviously, I'm a prop firm trader. I don't trade live accounts, but I mean I used to, but again, it's only a pro to be trading a funded account rather than your own money. And yeah, so I find success with that. You guys can honestly put however many lots that makes you comfortable. Heck, you can even go ahead and full port. There's nothing in it for me. I don't give two shits. But again, people who want to have a full-on consistent strategy, I do suggest 2%. 2 to 3% in the strategy that I'm about to teach you guys. Okay, so let's get into actually teaching the strategy, because I kind of went into like a small breakdown, like a mini breakdown. But I look for liquidity sweeps, market structure shifts, fair value gaps, and I look at the bias and how I kind of play the investor role. So I kind of tell myself, okay, look, if I want to invest in the Nasdaq, I wouldn't want to invest when it's already up top. I wouldn't want to invest at 20K, because if the market does drop, I'm losing money. So I want to buy low, obviously sell high, right? So buying to sell high is to short the stock itself, but to do that you need extra confluences. You can't just buy when it's high, because again, that's not how really trading works. So what I'd look for, we're gonna act like this is 9 a.m. Okay, so I would look for a market structure shift to the downside, and then a momentum shift. Nothing higher than this point. Okay, nothing higher than this point. So I'd see a momentum shift just like this, and then I would wait for a candle to break under to give me more and more lows, making lower lows and lower highs. So in this fair value gap that it re-enters into, I would enter into this fair value gap as a short, and then I would kind of ride it to like a certain point, maybe even here. I kind of ride it down, pause, no diddy. I'll kind of ride it down to this point, and I put my stop loss, like, things I don't trade with stop losses anymore. When I do teach my students, I do tell them, hey, you have to put stop losses because it's the safest method, but I don't do it. Again, I don't practice what I preach anymore, only because I'm a bit more experienced. And this is what happens with all your favorite other traders that you know. They don't practice what they preach now, but it's kind of like a father figure telling you, hey, don't do this mistake. They're saving you from making this mistake that they used to make, and then they're telling you just follow this certain strategy and then you'd be good to go, right? In my case, doing the same thing. However, I have a bit more experience, so I can get away with kind of losing. It's what makes me comfortable, and it could whatever makes you guys comfortable as well. But I don't want to be liable for people losing their accounts or money. So I suggest putting a stop loss right above the recent high and let it ride down to the bottom. So that's what might actually happen. This is what actually might happen in Asian session. Asian session is around now, basically. So if that happens, perfect. I can probably update you guys on my Instagram. So go follow my Instagram. The link of my Instagram is in the description. Go ahead and follow it, and I'll keep you guys posted and updated. If it happens, it'd be pretty cool. I'll reference the story, like I'll post like a story and I'll reference it to this video. But yeah, that's so simple. I look for fair value gaps, market structure shifts, and liquidity sweeps. Kind of doesn't always have to be liquidity sweep. I kind of don't give two shits about that right now. So again, I would because I have knowledge in how investors and institutions work and how they would buy stock usually. That's what makes me more confident in my trades. Okay, so most people, this is what I see. This is what goes through my head. Okay, people are like, okay, we are super high. We're super high up. Okay, they'll probably draw like a huge line, be like, oh my god, we're super high up from the recent low on July 2nd. Okay, so this was literally yesterday, July 2nd. Look how high up we are. I would see this, okay, and be like, okay, price just dropped below the, this point, this huge consolidation block, and then broke structure to the downside. Okay, most people would be like, all right, they're gonna mark out a fair value gap. Which one? Let's say this tiny ass fair value gap. Okay, that doesn't even fucking count. Some people will mark out. See, there's no fair value gap to mark out anyways, but this candle did hit around here, which is sort of a fair value gap, I guess. Some people might even count that in, but that's where most people would go wrong, because this candle became an inverse fair value gap. It broke above this structure and the fair value gap, indicating that price will continue going up. In my head, at around this point, I would kind of know that price is going to start going up. I'll kind of feel it, right? But I don't trade based off feeling. I trade based off of what I see. So because I feel this, I kind of wait for the confluence of the next couple candles. So at 9:30 market open, this candle would shoot up, which it did over here, and it broke above the fair value gap or the structure and made an inverse fair value gap, which in turn actually made its own fair value gap to the upside. And then that's when I would enter once price relatively touches this. As you can see, it doesn't actually touch it, but we know what spreads are, and we know how spreads work. So the spread itself would touch your buy limit order, so it doesn't really matter. Different brokerages have different charts, so on a different chart, this most likely did touch. Everything's just different. It just depends. Okay, so when it's relative, it still counts, and yeah, it doesn't have to be to the dot every single time. That's basically my strategy. I trade logically. I don't really trade based off of patterns like people do. I don't trade the silver bullet as much anymore. I do still teach it to my students because it's the most beginner friendly, and it's the easiest strategy to like learn, right? And once you learn that and you master that and it becomes second nature, then you could start going to the strategies that I'm teaching now. I'm teaching more of like raw strategies instead of a follow the plan strategy. It's just go based off what you are seeing at the moment, and don't go based off of a certain plan, because when you have a certain plan and it doesn't go to plan, you don't end up trading that day and you miss out on so much opportunity that you're not flexible. You're not a flexible trader. I became a flexible trader. That's why I've been gone for 2 months, starting to, trying to actually learn the markets properly before I come back to YouTube and start teaching again, because it became repetitive, and I didn't want to teach the same thing and have someone else's lessons recycled, like the silver bullet, because it's not my teachings, it's actually ICT's method, obviously. So it's called the ICT silver bullet, not mine. So is the unicorn method, it's not mine. And so is the Judas swing, which is not mine. So I would like to teach my own and kind of go based off of that, and I can prove it to you guys. Like, if you guys genuinely want proof that I'm getting my payouts and it's actually working, I can show you guys my payout history. Like, it's genuinely working for me, and this has never failed me. For the past 2 months, this has never failed me. This strategy that I taught you guys today. So I'm giving y'all free sauce. I do have a mentorship coming up, so the mentorship will include most, or actually in more detail of this strategy. I will continue to teach this strategy on my YouTube channel, but to go into more detail, to actually have a better understanding, I will be putting it into my mentorship course. So you guys can go ahead and purchase that once it comes out. But for now, this is how I basically trade from now on. And I kind of do implement like Silver Bullet and all the other strategies that I learned from before into mine sometimes. Okay, just for extra confluence, and that's basically it. So yeah, that's all for the video, and I'll see you all in the next one.